Okay, thank you so much, everybody, for joining us today and taking a look at this video. We appreciate it. The topic today is fuel your retirement. No pun intended, but actually pun intended because I do have a special guest here. But before we get to him, we're going to talk about the self-directed IRA, solo 401k, just briefly, and how we operate here at Sense Financial. And then our special guest is going to talk about wealth strategies in oil and energy and mineral rights as well, actually. So, really excited about this, and thank you so much for the opportunity. A little bit about me. My name is Brett. I'm a solo 401k self-directed IRA consultant here at Sense Financial. And our little disclaimer, we are not a fiduciary. We don't provide legal, tax, investment, accounting, or other professional advice. We're here to provide education. Both of us are today. If you need such uh, expert advice, please seek out the proper professional in that area. A little bit about Sense Financial. We are a boutique firm that specializes in self-directed retirement accounts, specifically with checkbook control, which actually we're not going to talk a lot about today, but checkbook control allows you to not have to go through a custodian when you're making investment decisions. And in the self-directed IRA world, if you have to go through the custodian for everything, especially when you're doing multiple transactions a year or even a month in some cases, it can cause red tape, delays, kickbacks on the documents if they reject them, transaction fees, etc. We don't do that. We only do checkbook control. We've been around since 2010, so well past the startup phase. Our clients love us. You can check out our five-star reviews all over the place. And to date, we've assisted well over 3,000 clients establish over 4,000 different types of self-directed retirement plans. And another testament that our clients actually like us is that most of our business comes from referrals. It comes from referrals from affiliates, business partners, such as my guest here today, but also, and the large lion's share of them actually come from our existing clients. So, just a testament about who we are, how we work, and you can check it out yourself. In fact, we encourage you to do that. Some of the top level, high level benefits of self directed IRA and solo 401k are that most of our clients or potential clients, if they're getting on my calendar, they are looking to do more of what they are typically already doing. Okay. So they're already a real estate investor, they're already doing private lending, they're already possibly investing in oil and gas ventures. Maybe they have some experience in crypto, whatever. If people come to me and they say, I want to invest in crypto, I like to ask them, do you have any experience doing that? And if they say no, I say, okay, be careful. Don't bet the farm on it. In fact, I don't recommend you bet the farm on any single investment, which actually is part of what makes the self-directed accounts so amazing is that they really do provide true diversification because not only can you stay in Wall Street, but you can actually invest in anything allowed by law, which is anything except for collectibles, uh, baseball cards, stamps, wine, cars, art, that sort of thing, and life insurance in the IRA. So just about the sky's the limit. There are some rules around who you can invest with. You and your immediate family are disqualified parties. So it's important to know how those work. But otherwise, the true diversification for sure. And you can have Roth or traditional pre-tax. So that's cool. The more Roth funds you have, the merrier, right? That's tax-free ATM withdrawals when you retire. So after 59 and a half. And then you can actually use financing. So some of our clients are looking to invest in real estate and they would like to get a mortgage. And you can use what's called non-recourse financing, where you cannot personally guarantee the loan, but the property is the only security, right? So if there's a default, the property is what's taken by the lender and nothing else. That's where the foreclosure occurs. And then we talked about the checkbook control. And then the solo 401k, unlike an IRA, actually allows for up to $77,500 of annual contributions, literally 10 times the IRA limit. And so we call it the ultimate retirement plan. because it is. And that's just scratching the surface. But that is just a bit about us, a bit about how the self-directed IRA and the solo 401k works. Happy to answer any questions you have. Wherever you find this, just you can visit our website, SenseFinancial.com, or put a comment in the comments section if it's on YouTube or whatever. We're happy to jump in and answer questions or hop on a call to educate you further and get to know your situation. The other thing is, well, I talked about that and I talked about the diversification, but just real quick, Ecclesiastes 11:2 says, divide your portion to seven or even to eight, for you do not know what misfortune may occur on the earth. And uh, COVID was the most recent. Who knows what the future holds? Obviously, we had the Great Recession of 2008 and 9 and that era, and that was a whole debacle for a lot of people. But people who were truly diversified in not just in the stock market really didn't see a big dip during that time. And so this is another reason why self-directing your retirement account, taking control of it, can actually protect you from those ups and downs in the market. And one more thought on that. Think about this. When you're investing in something where two people are signing on the dotted line for what the investment is going to be, for what the payment monthly or quarterly or annually or whatever it is going to be. There's no guarantees. Okay. We can't use that word, but it's almost there because two people are agreeing to the terms and the payments and the interest, etc. You simply cannot get that in the stock market. Okay, so when I say you can take control by self-directing, I truly mean it. You can take control not just by choosing what to invest in, but you actually can pretty much control the return on your investment. And so just something to think about as you're considering this as an option. Without further ado, though, this is not about me today. I want to introduce you to our guest speaker, Thomas Lorance, Director of Wealth Management at Eckard. Thomas is, Eckard actually is a family owned oil and gas company specializing in mineral rights and royalty generating assets in the energy sector. With a robust background and in both finance and the oil and gas industry, Thomas brings a unique skill set to his role. He has worked as a financial advisor and held various positions in the oil and gas sector, gaining hands on experience on drilling rigs. Very cool. Additionally, Thomas served as an associate board member and business mentor, where he helped business owners enhance their business value and refine sales strategies. His combined expertise in finance and the energy sector enables him to assist qualified individuals in acquiring direct ownership of oil and gas assets for their portfolios. All right, Thomas, thank you so much. I am going to stop my share and then you can kind of take that over at your convenience.
All right.
I remember hearing a story. It's funny as you're getting your share going about some guys who were like living and working on oil rigs. And it's actually where the person I was listening to is a tax attorney of some sort, a retirement attorney, and he was saying that he learned the mega backdoor Roth option from these guys like 15 years ago or something like that, who were working on this oil rig. All their expenses were essentially paid for, and they're making a bunch of money. And so they said, "Hey, we know we can't get a tax deduction for making these contributions because we're already over the limit, but we want to do it. And then we want to immediately convert it to Roth and build
Hmm.
up our Roth." And your story of working on the oil rig kind of reminded me of that. So pretty cool.
Yeah. And that's actually something that we'll talk about today is not just, well, it's the Roth conversion, but it's specifically how energy assets can benefit that process and make it even more valuable opportunity. Um, so first, just want to thank you for having me on. I'd say probably a third of the business that we do, if not more, comes from or comes through self-directed IRAs and 401ks. So, really, we think the only thing stopping that from being even more is just letting people know that it's possible. Like you said, having that diversification just creates such an advantage, uh, because you really don't know what's going to happen next, in any given asset class. Um, and so when it comes to alternative assets, being able to have something that is tangible, you can go out and see it, right? That it gives you that advantage of having something that isn't just going to sway up and down based off of emotions, and which is essentially what the market does. President
Yeah.
says something we don't like, or we're not really sure what it is. Hey, we're all scared the market goes down. Oh, they come back and says something great that we do like, market goes back up. It's really just an indicator of people's emotions.
Yeah.
Um,
And by the way, real quick, so sorry. You're this asset class is not something that a lot of people have a lot of knowledge about. So I am super excited to hear more about this from a
yeah,
selfish perspective, but also to educate our clients because honestly, most of our clients come to us and they want to invest in real estate in some way, shape, or form. Now,
right.
we'll listen to you talk about why this is a form of real estate investing, which we're happy to hear about. But rarely does somebody come to me and get on my calendar and say, "Hey, I want to invest in oil and gas." And so
Right.
I'm happy to bring this to the masses as well. And so
Awesome.
excited. Yeah.
Yeah, yeah. And that's exactly what we're looking for, is people that want to invest in real estate, but also see the value of owning energy assets. And what we'll talk about today is kind of where those two asset classes meet. Um, so I'm gonna share my screen and see if I do this right. How's that? Are you seeing my shared screen, Brett?
Yes, it doesn't look like it's in presentation mode quite yet, but I can see it
Oh, okay. Hold on.
because we
Maybe,
can see like the next slide and all that stuff. So
okay. Then I shared the wrong one.
this is proof that we're doing this uh, like I don't know, naturally. We didn't test out. We tested out my side, but not your side.
Yeah.
That's okay.
How about that?
It'll
That
work. It looks the same, but it'll work if you
okay.
can't figure out the presentation mode full screen.
Okay.
It looks like the main slide is kind of, two-thirds and the next slide is like a third. So,
Okay. Okay. Let me. I'll try one more time, and if not, we'll just go with that.
all
Uh,
right.
okay. Do this. Okay. There we go. Figured it out. Um, All right. So I think with any kind of asset or any kind of investment, it's crucial to know who you're investing with. Like you said, with these alternative assets, with checkbook control, you're actually communicating with an individual about that asset. You're not just putting money into a platform or something like that, buying the asset. You're having a conversation with someone. You're deciding whether this is the right kind of thing for you. You gave a bit of a background with Eckard. Ultimately, we've been around our founder and chairman of the board, Troy Eckard, has been in the industry since 1985. Uh, there's been quite a bit of change since then. Throughout the 80s and 90s, a lot of risk in it, right? A lot of trial and error. That's probably why a lot of people don't get into oil and gas, is because they think that it's still that way, where I'm going to go put $1 million into something and I might lose it all. at Eckard, we don't like to take a whole lot of risk, which doesn't seem like it fits in the oil and gas industry. But when you use your experience, you're able to really narrow down and determine, how to mitigate as much risk as possible. Um, the So our founder, Troy, he's like I said, he's been in the industry since '85. He had his own brokerage. He was brokering other people's drilling deals up until about 1995. After that, that's when he started his own operating company. So that's where he was actually drilling the wells himself. You have your geologists, your engineers, you're designing the wells. At that point, he had his money on the line. He's investing in these wells and bringing other people in to participate in it as well. Did that up until about 2018, 2019. And that's where we transitioned primarily into oil and gas mineral rights. I won't go too far into the drilling. It's actually called working interest. That might be another conversation that we could have.
Hmm.
But that's usually something you do outside of a retirement account to capture those tax benefits. Um, so we'll talk about that another time. But transitioning into the mineral rights at the time just made a lot of sense because what we were able to do is instead of making investments into individual wells, we could actually go buy the oil and gas that's in the ground, and essentially we get paid every time an operator, an oil company, uh, pulls a barrel of oil or molecule of gas out of our minerals, right? So
Hmm.
it's very similar to real estate, which we'll talk about, in that you have tenants that are paying you when you have an office building or a multifamily building. For us, our tenants are multi-billion-dollar oil and gas companies that have a legal obligation to pay us before they pay themselves. So it's a pretty good place to be um, when you're first in line in getting paid. Um, we are very big on education, hence this webinar that we're doing. This is a picture from one of our partner conferences, and so everyone in that picture is currently investing with our company. At this conference, I believe we had 500 of our investing partners there. That's of the over 2,000 investing partners that we work with. Um, as important as it is to know who you're investing with, I think it also adds a lot of value to know who is also participating with you. I can tell you in that picture, you're probably looking anywhere from three-quarters of a billion to $1 billion in net worth. I'd say probably in the first two rows is about half of it. Um, these are individuals that have been lifelong investors, business owners, engineers, consultants. Um, Several of them in that picture and other people that are investing with us are actually oil and gas experts themselves. And essentially, they recognize that they don't have the ability to create what Eckard has created, right? To be able to vet the assets and put them together in the way that we do. And so they choose, instead of going out and doing it themselves, to actually invest with Eckard. Um, so we've talked about, I've kind of started mentioning what the asset is. So we'll jump into it. What it's not is traditional real estate. So I kind of wanted to make a comparison of what people are usually going to be used to when they're making an investment into real estate. So in traditional real estate, you're buying what's on the surface, right? You're going to go purchase a building, you're going to purchase raw land and develop it. Essentially, you're going to buy something that you feel is going to be worth more tomorrow than it is today. We'll say, and or produce enough cash flow to justify tying up your available funds for some period of time. So I say, okay, that's a fully occupied building. Each tenant is paying X amount of dollars. I want them to be paying it to me, so I'm gonna go pay a premium for a fully occupied building. What most people are looking at is probably more so something that is partially occupied, and then they want the upside of filling it up or making some sort of improvement. So there's some pros and cons associated with it, right? You're usually buying for cash flow, or you're buying for the ability to sell it at a premium to the next person that wants that cash flow. Highlighted those in green. Some things that can be good, might be bad, is leverage, right? If you're leveraging the asset, that can be really good. You're using a little bit of money to get a lot more asset than what you could if you were just going out and using all cash. It could also be bad if we experience what we're experiencing now, which is an increase in interest rates, right? That can limit our overall return. You potentially have capital calls. So, plumbing goes out, you have a hurricane come through, earthquake, whatever it is, you have the potential of having to put more money into your asset to bring it back up to par, or doing any kind of improvements beyond that. And then the other thing that could be good, could be bad, is timing the market for a sale. If you time the market right, it's very good, right? If I bought at a low and I sell at a high, then all things are great. However, again, kind of what we're seeing in a lot of instances today, especially in multifamily, um, if you were planning on selling right now, right? If you were selling after 5 year, 7 year, 10 year period, and that happens to fall during a down year, well, now that expected payout is going to be pushed to some future time, right? So again, put it in yellow because it could be really good, it could be really bad, right? Just depends on what situation you're in. Um, the two negative parts that I put that's 100% negative is going to be your holding costs. So if I have a piece of raw land, I'm paying to hold that, right? I'm paying taxes to be able to keep that asset. If it's a piece of property that has improvements on it, has a building on it, I'm paying taxes to hold it, whether I have tenants or not. And then the liability. Um, Something goes wrong, again, kind of on par with the capital calls. I'm gonna have to put money out of my pocket in order to improve it. You could also say, someone slips and falls, and potential lawsuits, that kind of thing. Just depends on how things go with it. So enough about other kinds of investments. A lot of you know about that already, but to give you something to kind of compare to. So what we're dealing with is not the surface. We don't care what's happening above the ground. What we're looking at when we talk about oil and gas mineral rights is what's happening subsurface. So while you have these holding costs, liabilities, capital calls on the surface, no one's going to slip and fall under the ground, right? What we own is the right to all of the minerals that are under the ground. So for us, we focus on areas that are primarily oil and natural gas. Technically, though, mineral rights exist throughout the entire country. It's something that's unique about the US, that private citizens are able to own the natural resources in the ground, right? You go over to Africa, Middle East, South America, it's largely going to be owned by the government, right? The individuals like you and I don't have the opportunity to really profit directly off of the natural resources within the country. So what Eckard's doing is we're using our team of experts, our geologists, engineers, our landmen, they're people that are going to go evaluate the title and deed associated with each piece of real estate that we're looking at. Um, we use our team to go identify the very best assets that we as a company want to own. So our objective, just as a kind of a side note, our objective as a company is not to simply sell our investors an asset and make a profit off of that. What we're going to do is we're going to go identify assets that we want to own ourselves and keep within our own energy portfolio. We're going to use our cash to go out and acquire those assets. See, we don't like leverage in most instances because we don't like being subject to a bank. So we go buy what we have the ability to buy, and then I'm going to package those individual assets. I'm going to bundle them together. As a company, we're going to keep anywhere from 5 to 25% of that asset. And then we're going to sell our investors the remaining amount of that asset. The proceeds of that are going to allow us to cover our costs because we're literally selling you a piece of property that we own. So covering our acquisition costs, our taxes, and then the profit from that sale is going to go right back into acquiring more minerals, right? And that's how we grow our company is by selling and then redeploying. But essentially, like I said, we are doing this so that we can profit off of the exact assets that our investing partners are profiting off of. So 100% skin in the game on our part, and a huge incentive to only buy top tier assets. Otherwise, we're filling our own portfolio with garbage, and that doesn't work out well. So when we go buy these minerals, we're identifying the areas that are going to have um, obviously oil and gas in the ground that's going to be accessible. Um, a lot of the times, I'd say every offering that we have, and most of the assets within that offering are going to be de-risked because someone else has already drilled a well in them. So when we go buy these assets, we go buy these minerals, we're going to buy minerals that are already being leased by an oil company. So Continental, Oventive, Exxon, Chevron, these are the people that have already leased the assets. So we know who's drilling the wells um, before we go buy it. So we don't go buy it and fingers crossed that we get a deal where someone wants to lease it from us. We de-risk it in that sense. What we're actually buying are these layers here that are going to contain oil and gas in them. And so what I want is I want an oil company to come in. I want them to park a rig on top of the minerals that I own, and I want them to drill well after well after well. Because like I said previously, each barrel of oil and molecule of gas that they pull out of the minerals that I own, I'm going to get a royalty for it. So I get my percentage without investing in an individual well. So going back to a piece of real estate, imagine buying a building and then someone else comes in and says, I'm going to cover all of the improvement costs. And instead of you having to invest and being on the roller coaster with me, I'm so sure of myself that I can do this. I'm going to cover the costs, and I'm just going to pay you a percentage for allowing me to use your property. That's exactly what we're doing. So I don't care what level, call it a zone, what zone they drill in. I'm going to get paid on every single one of them. So, unlike some other assets, mineral rights, this is probably the part that sounds the most outrageous. Realistically, we expect these assets to flow for the next 50 to 100 years, produce produce revenue for that long. So, this is truly a legacy asset. It really that has everything to do with the fact that there is so much oil and gas in the ground that they don't have the ability to pull all of it out in any kind of near-term future. Um, in fact, right now, if we as an industry were to go out and drill every single well that we could that made economic sense, meaning we had the technology to do it and it we were able to sell it for enough money, we would only be able to access between 7 and 10% of the reserves in the ground. So, and a well is going to produce for 20 to 30 plus years. So, everything, I drill everything now, and it takes me 20 to 30 years to pull 10% out of the ground.
Man,
So,
that makes you wonder why we're not energy independent as a country. Like
yeah,
we really should be. And we don't need to turn this into a political conversation, but holy smokes.
yeah. Yeah, there's no shortage of, we'll say, potential energy under our feet,
Yeah,
right?
it's wild.
And that, I mean, what's interesting is that, that conversation about why we aren't and how do we do it? Will we ever be? It's a really interesting conversation to have because there's a lot of things that seem like they would make sense to do. Well, ultimately, it comes down to risk and reward and bandwidth.
Sure.
Just to touch on it because you brought it up, and I think it's relevant. Um, if I'm an oil company and I'm going to invest trillions of dollars into more rigs, pipeline, refineries, which we need all of these to be improved. Um, it's a lot of risk for the potential that 4 years from now, I get another administration that isn't pro oil and gas and put all these restrictions on me. Now I've just invested all that money and I'm not going to get the kind of return that I need, right? So
Yeah.
that actually works out well for us as mineral owners because what I want is a lot of wells being drilled, and I want to get paid as much per barrel as possible, right? So sometimes, like we had after the Russian war, um, after it started, we had incredibly high commodity prices, and so all of our assets were just performing just through the roof, right?
Mm.
As commodity prices dropped, right, the assets weren't doing as good. But just like any other kind of asset class, there's a good time to buy and a good time to own. And very rarely do those two overlap, right? If I was to go buy these things during that time of extreme highs, I'd be paying just wild premiums in order to acquire those assets.
Yeah.
So, um, yeah, it's a really interesting industry and an asset class to get into. I like to geek out about it. I'll try not to right now as much. That'll be another conversation we have. But yeah, it's very very relevant too.
Tell me if you're going to go through this in the next slide or two, and I'll shut up.
Yeah,
But I'm still it's a little bit unclear to me, and so it probably is to the audience, especially if they're layman's like I am on this subject. Uh, who so who actually owns the land, and is it just the land underneath the ground?
Hmm.
And then, so yeah, paint a little bit of a clearer picture on where the investor comes in and where Eckard
Yeah.
comes in, because it's a little bit unclear to me, and I apologize if you're going to end up repeating yourself, but I still want to understand better.
Yeah, no, no, you're good. I think we can absolutely address that here. So when we're investing, when we're going to go buy the asset, we're not buying anything on the surface,
Okay.
right? We
Okay.
don't care what's happening there, right? Like you mentioned before, I worked on a drilling rig. Well, at one point we were outside of Midland in West Texas, and we were drilling. You drill down and then you drill out,
Okay.
right? They can actually turn that bit underground.
Mm.
And so we were drilling right underneath downtown Midland, right? We were able to do that because we owned what was under the ground. We
I
didn't
see.
own what was on the surface.
Right.
And so when we go acquire these mineral rights, it is purely what's under the ground.
Okay.
When someone invests, they're buying the exact same asset that we are. They're buying just what's under the ground.
Copy that. Got it. Okay.
Yeah. My
Very
kids
cool.
ask me what I do. I tell them I sell rocks, right? That's what we're buying, just very valuable rocks.
Yeah, so you're selling land in a way, but
Hmm.
it's not really called land. It's called mineral rights because it's what's underneath the ground, right?
Correct. Correct. And the interesting part about this too is that in the eyes of the IRS, it's the same thing. So this is a like kind asset with traditional real estate.
Yeah, there you go.
So, it's not applicable to the IRAs or the retirement accounts, but I'd say another third of our business comes from people that are doing 1031 exchanges from a piece of traditional real estate into mineral rights, right?
Yeah,
Which is something that a lot of people don't realize they can do. But that's only possible because one, they take direct ownership of it, and two, because it is a like kind asset.
very cool. And a lot of our clients own real estate outside of their retirement account. So that's still valuable information to share for
Cool.
sure.
Yeah. Yeah. And I'd say a lot of people that do that, you think about it, and I dealt with this as a financial advisor. People would ask me, okay, I want to sell this piece of property. I bought it down here. The market's now up here. I don't want to pay capital gains. How do I sell this and not pay capital gains?
Right.
And I, I don't know, you get an attorney to build out a very expensive trust and you go through all of these steps. And ultimately, if you're not selling something for several million dollars, it's probably not worth doing. Uh, then I learned about mineral rights and I'm thinking, man, I wish I'd have known about this before, because you can sell at the top and move that money into a completely different asset class instead of going from an expensive building to an expensive building.
Right.
So, um, but with us only owning what's under the ground, that's where you have the other things listed under the mineral rights section, which is zero capital calls, because all I do is own the land. I'm not paying for the improvement on it. That's what the oil and gas companies are doing, right? They lease it from me. They cover all costs of improvements. They take on 100% of the liability. So they could have the entire rig catch on fire, burn to the ground, massive oil spill, horrible environmental issue. I wouldn't even know about it as a mineral owner,
Mm.
right? Unless it was reported on the news or something, which it never is. But these are things that I don't have to worry about, because again, I just own rocks, right? Um, so as an investor, I take direct ownership of the asset. I'm not investing in an LLC. I'm not investing in a fund. When Eckard puts this package together, I'm taking mineral rights under different areas, right, or in different areas, and I'm meshing that into one thing, one asset that someone invests in.
Mm.
So when you invest with us, you're taking your proportional amount of each individual asset within this one package. Okay. So you take ownership through a purchase sale agreement. So mineral rights are an asset that have a title and deed, right? Eckard, we keep our name on the title and deed, so that way we can manage the asset, right? We don't
Mm.
charge management fees, but we make sure that the oil companies are paying us the right amount and paying us on time. They don't talk to you unless you have your name on the title and deed.
Mm.
We also keep our name on the title and deed to preserve the asset value. Think of it in traditional real estate terms. If I have two identical properties or similar properties, and this one's owned by a single person, and this one has 100 or 200 individual owners, I'm not going to go talk to all of them. I'm going to go to the person that owns it singly. That's how it works with Eckerd. When someone comes in to buy, they see our name. We can then proxy our investing partners if there was to be a sale or something like that.
Interesting.
So, but that purchase sale agreement that I mentioned, that is a legal document that entitles you, the investor, to call that title and deed at any time for any reason. So that's why you're able to do that 1031 exchange, because that document is strong enough to say you're the rightful owner of the asset, even though the title and deed is being held elsewhere. So
Got it.
kind of a unique way of investing.
Yeah,
Um,
very cool.
and because of that kind of ownership, you will own the property in perpetuity. It's yours from now until forever. Um, the only way that you get out of it is if you sell it, right?
Mm.
Just like a piece of real estate. That's why I have on there that it is fairly illiquid. Um, we have a marketplace where you can offer it to other of Eckerd investing partners, but ultimately there is no forced exit, which I think a lot of people appreciate.
Mm.
Um, Lastly on here, what I wanted to add was just the upside. What we've discovered over, like I said, the industry's changed since 85 and changed even more so prior to that, is that they're discovering new areas underneath what we already own that contain oil and gas.
Mm.
So the more that they discover, and really the more that they learn how to access, the more valuable my asset becomes. Because now
Sure.
I don't have 250 million barrels of oil under the ground per square mile. I have 350 million. I have
Mm.
500 million, right? They keep discovering how to access more and more of it. So,
And again, this is the tenant doing this.
correct.
So they're just doing what they do.
Yeah.
Right?
This is the most passive investment that I'm aware of,
Yeah.
because there's nothing that you or I or Eckerd can do to make it any better or any worse, right? We go out, we Eckerd go out and find the very best assets to own, and our risk, and I should have added this on there, our risk is just timing,
Mm.
right? Because I can't control where they drill the next well. I can take an educated, assumption of where they're going to go, which is what we do. But at the end of the day, I don't control the drill bit. These operators do.
Right.
And so, I have to look at it as I'm either going to get revenue from the wells, or I'm going to have the asset value continue to increase as they develop ways to access more of those minerals. And then also the ones that they can access, as long as those reserves, that oil and gas is still in the ground, it's going to retain its value, right? Oil and gas is not going to go anywhere. So the only way that I lose my money is if the value of oil and gas drops to zero, and that'll never happen.
Yeah.
So um, I think we've covered at least high level and maybe a little more than high level what the asset is, and like we talked about, we can follow up on this. I think one of the key reasons why we're having this conversation is really the strategy involved in making the investment. There's so many moving pieces. You can get into the entire world economy when you're trying to figure out oil and gas. Um, there's so many reasons to not do it if you're
Mhm.
trying to know every little bit. At the end of the day, you have to know that the people you're investing with understands those things, right? Um, and then you need to understand how you can make your investments and what kind of value it can add to you. So this page, and I'm not going to read every little bit of it, but ultimately, um, when we talk about the strategy that most of our more sophisticated investors are following is they're following that Roth conversion that you spoke about earlier. It's purchasing the asset in your traditional IRA with the intent of moving it from your traditional into your Roth. Now, the I guess maybe the pain point of that, or the downside of that, is when I move it into a Roth IRA, that creates a taxable event. So I have to realize uh, those those taxes in the year that I make the conversion. So the whole reason why we have to do this, likely anyone that's watching this, um, if you're watching this, if you're talking with us at Eckard, then you've grown out of being able to make direct contributions into a Roth account, or at least a Roth IRA. And so you have to do the backdoor conversion of putting it into a traditional and then moving it over, right? Um, and so, what our investors will do is they will purchase it in their traditional, and then they will take advantage of the way that minerals are appraised. So you have your market value, which is what Eckerd buys and sells off of. And then you have what we refer to as the bank value. So this is if I was to take the asset to a bank to go collateralize it. So they're going to be much more conservative than the market is. So when Eckerd goes and buys something, we're going to say, how much is it producing now? What's in the ground? What's the future value? And we calculate it all out and say, okay, we can pay you $100,000 for that asset. Okay. Now, if I was to go ask a bank what they would pay for it, usually they would say we would value it at maybe half of that, sometimes a quarter of that, because they're looking at the ability to just recoup that cash flow on a consistent basis with taking as little risk as possible. So I don't care what might happen in the future. I want to know what's happening right now. Now, when Eckerd buys minerals, we're not going to go out and buy that fully occupied building, right? We want upside. We're looking for arbitrage. So we're going to buy some minerals that are producing, some minerals that we call them ducks, drilled uncompleted. So an oil company's already made the investment, but they haven't finished it yet. We're going to buy these kinds of assets that are going to have a lot more upside, right? So there's value there that a bank isn't going to recognize. So ultimately, what's happening is I go buy something for $100,000, and then I go get a third party appraisal on that asset. Move to my next slide. I go get a third party appraisal on that asset. They essentially say you overpaid in our eyes, right? By we'll call it 50%. So that $100,000 on paper is only worth $50,000. Now, in the market, it's still worth $100,000. But once I get that document that justifies why they're saying it's worth $50,000, I take that to my custodian, right, and say, this is the new value of the asset. I need you to reduce the value from 100,000 down to 50,000. Also, I'm going to do a Roth conversion now. So now instead of moving $100,000 from a traditional into a Roth, I'm only moving $50,000 from a traditional into a Roth. So that's what I'm going to pay my taxes on. Then what's going to happen is at the end of the year, when your custodian is going to require your fair market value, Eckard is going to send them the original purchase price. That's what we use as the FMV, the fair market value. So on paper, your $50,000 asset then jumps back up to a $100,000 asset. So you feel poor for a little bit of time, but then it comes back, right? So
Yep.
kind of a lot. I threw a lot at you with that, but so I'll stop. You're the the expert on the IRAs. What questions do you have on that you think of
Yeah.
mine?
Well, more so some comments, especially on
Yeah.
this topic. The Well, first off, whether you're over the annual contribution limit or not for an IRA, you can absolutely take advantage of this, as Thomas was mentioning. So I want to just hammer that home for sure.
Hmm.
It's kind of a form of a backdoor Roth. And
Hmm.
then in the solo 401k, of course, there's no we didn't talk too deeply about the differences between the solo and the IRA, other than
Yeah.
the high annual contribution limits. But the solo has a Roth and a traditional bucket built into it. So doing Roth conversions in the sense of converting assets instead of cash is much simpler in the solo 401k because they're both in the same plan, as opposed to an IRA, which is two separate plans. It's still doable, but if you do it with an IRA and it's an alternative asset, like not something in Wall Street, oil and gas, mineral rights, for example, then you need two self-directed IRAs. It is possible in some situations to switch your traditional to Roth if you're converting the entire thing to Roth, but typically people aren't doing that. They still have some traditional left. And so they simultaneously need two separate self-directed IRAs, one Roth, one traditional, whereas with the solo, it's all in one plan, as I mentioned. And there are no, one other note, there are no income limitations on Roth contributions for 401ks. So
Hmm.
you can go right through the front door with the 401k. However, I would never make a straight Roth contribution again, knowing what I know now. Not just what Thomas has presented to us here, but we've been talking about this for a long time, doing the same strategy with mortgages, trust deeds, syndication investments, things that are illiquid. This same strategy will work. Now, it seems like you might get a more significant discount with the mineral rights as
Hmm.
opposed to a syndication or something like that. The only exception I can think of would be as if you had a trust deed or a mortgage note and the borrower was in default and you filed a notice of default. So it's a non-performing note at that point. You're going to get a pretty aggressive appraisal value,
Hmm.
the correct way in this situation.
Yeah.
Uh,
Yeah.
and it could be reperforming again, or you could foreclose. And worst case scenario in that thing, in that idea, you foreclose, and now you own the entire property in Roth, not just whatever your note amount was for. So it can be a very powerful way to do this, but you can't necessarily anticipate that someone is going to stop paying their mortgage. With this
Yeah.
situation, it's going to come in more aggressively consistently, it seems like. And so I love that you shared this. I think it's amazing. Our clients can absolutely take advantage of it. Never make a straight Roth contribution again. Contribute traditional, reduce your taxable income dollar for dollar, and then do the investment traditional and then do the Roth conversion at a highly discounted rate. That's the only way to get money in Roth, in my opinion. I mean, it's the best
Yeah.
way. So, yeah.
Yeah, I always would tell people I kind of see the traditional IRA is just a means to an ends, right? It's getting it from there into the Roth, whether it's a 401k or an IRA.
Exactly.
Just my background as a financial advisor, we were in most cases trying to get people to move from traditional to Roth because it just makes things so much easier for estate planning, right? Legacy planning,
Yeah.
because you don't have those same kind of restrictions. And I won't get into all of that, but it just makes things a lot easier. Plus, who doesn't want to have their cash flowing asset, be able to access that cash flow tax free, right? As opposed to paying income tax on it when you pull it out. So
Yeah.
it just
Tax-free
makes a
ATM
lot of
withdrawals.
sense. Yeah. So
Um, I think I had maybe one question,
yeah,
and then we can sort of wrap it up. If the and maybe you're about to say this, I don't know. Uh, if somebody wants to learn more, obviously you have your YouTube channel, you have your website, but let's say they've kind of gone through all that. And there you go. There's your contact info. So if they're like, hey, I'm educated, like I'm either going to do a 1031, I'm going to use my IRA, 401k, like I just want to know how to pull the trigger. Is the best way to do that is to get on your calendar? Is that the best way?
yeah.
Or call you?
So there's six of us that our job is to help determine if we're a good fit for prospective investors, and really to determine if the prospective investors are a good fit for Eckard. We're pretty tight-knit group, right? We're very fortunate that we're not chasing every dollar. And so, and plus we're all salaried employees. So if someone doesn't invest, it doesn't affect our bottom line, right? So it's really just about making sure that it's a good fit for both parties. Um, but our job is to go through and help people understand this to the degree that they want to, right? um, we have a lot of the conversations about the economy and the government and all of that, right?
Right.
But ultimately it's up to you how far you want to go with it. um, the what I would say is, you can go to the website there. You can scan the QR code. We put this together specifically for this group. And so when you scan the QR code, and then you fill out the information form, you'll get access to two ebooks. One of them is going to be about the Roth conversion. The other one is just going to be about owning these assets in your IRA or 401k, right, in
Oh,
your
very cool.
retirement accounts. So those will be great resources too if people want to look into it. You can either call the office or you can reach me on my cell phone. You can use the general email, or you can email me directly. Whatever's easiest for you guys.
Awesome. Right on, man. Well, thank you so much for the opportunity. Yeah, lots we could still talk about for sure. So we'll definitely have to schedule a follow-up.
Yeah,
I'd love to get more into the way the checkbook IRA works in the solo 401k next time we talk, and then maybe chip away at a little more of what you guys have to offer as
yeah,
well, because I know there's more here. So
yeah, yeah. And I big fan of the checkbook. And if you have the ability to do the 401k, gosh, if you have the ability to do it, it's just so much easier and more valuable, I think.
there
So
you go. Right on. All right. Well, thanks, Thomas. Yeah, everybody, go visit his website, learn more, download those ebooks, which I'm personally going to do as well. And yeah, reach out to him, and he'll take good care of you for sure.
Awesome. Thanks, guys.